Have we seen the peak in corporate profits? New data from the government suggests that corporate profitability is coming under new pressure, a change in trend perhaps, and something that investors had gotten very used to, which was a steady and persistent increase in corporate profitability since the financial crisis. New data out for the first quarter suggests that profitability dropped at a 10% annualized rate. Now, this is the most severe decline since the Lehman Brothers crisis, so a fairly significant change from what investors had been used to. Now, this is important for the stock market because of something I discussed last week, which was this conveyor belt of credit coming from the debt markets into the stock market and boosting share prices via corporate buybacks. Now, companies like IBM, Hewlett-Packard, and many others have used this to kind of juice the returns for shareholders by lowering the amount of shares outstanding, and then what happens from that is that the earnings per share calculation that's so important and that Wall Street analysts and indeed investors pay very close attention to gets increased kind of artificially by reducing the number of shares outstanding. Even if earnings grow somewhat subpar, it increases earnings per share fairly dramatically, and that in turn boosts share prices. So this dynamic has been playing a very big role over the last few years, and if corporate profitability continues to come under pressure, it'll jeopardize this conveyor belt and in turn could put some new pressure on the stock market in an area that investors, I think, quite frankly, haven't really been looking at. So it's going to be very important to be watching corporate profitability as we head into the second quarter to confirm that indeed it's coming under pressure.